Okay. Hey, good morning, everybody. Welcome to Forex.Today, the YouTube channel of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of helping all of us plan our trades in advance, lower our risk as much as possible. Why? Because trading is risky and not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Hey, my name is Wayne. Good morning, how are you? Today it looks like it's going to be a beautiful day. There's mist over the water, smoke on the water, smoke on the water. I'm looking at the lake right now. Beautiful. Sun is rising. What a wonderful day. Okay, lots to be grateful for. Lots to be happy for. Lots to look forward to. Yes, wonderful day. But I didn't sleep well last night. I was tossing and turning. Let me tell you why. Yesterday was a long day. We ended the day by doing our hour-long day trading group. And I said one of the dumbest things I've ever said. I was a jerk. What a jerk. I said something so stupid. Let me tell you what I said. At the end of it, I looked at all the charts and I'm like, man, I don't really see anything here. I'm really tired. I did a big, long presentation. I'm like, I just don't see it. And it's a survival mechanism. Then I said, never trade when you're tired. Never trade when you're drunk. Right, Jean-Guy? And that came across wrong. What a dumb, low-life thing to say. So I apologized to Jean-Guy. I respect him dearly. And it came across like Jean-Guy would be the type of guy to trade while drunk. Oh, it's not what I meant, but that's how it came across. And that is just low. So I apologize, JGB. I respect you. What I meant was you're definitely the type of person that would agree with my statement of you would never do such a thing. So I apologize from the bottom of my heart. I've been tossing and turning. It really bothered me that I said something so stupid. So I apologize. So I hope you can forgive me. Okay, let's go through the charts. Take a look at the stock markets first. I want to start with, I guess, Euro 50. And boy, we had a big down day yesterday. Maybe one of the reasons is because Credit Suisse dropped like a ton of bricks. Quite a bit, actually. What, 20% or something yesterday? So I ended up buying some. Okay. That's right. Jean-Guy is a good friend of our community. A heart of gold. He's hardworking and driven. No, but it doesn't matter if you took it wrong. It was just wrong. It doesn't matter what I meant. It's how people take it. Yes. Yes. Yeah. So you didn't take it wrong. It was just stupid for me to say. I blurted it out. So anyways. All right. So anyway, stock market dropped quite a bit. Credit Suisse dropped quite a bit. It dropped below $2, so I bought it around $2. And I'm going to hold for zero or 100, whatever comes first. 0 or 100. Okay. King quit drinking 44 days ago. Congratulations. Best decision I ever made. Yeah. Yeah, it's interesting. Yeah. I drink wine every day, or pretty much every day. So, yeah, but I can see, I can see how quitting, yeah, I could see it. Don't think I'm there yet, but I'm close. So, okay. So anyways, yeah, so we'll see if I don't know. So I bought Credit Suisse. So just so you know, kind of like, I don't owe you full disclosure of what I do with my retirement account, but whatever. I bought Credit Suisse yesterday, and the day before I bought Truist, a regional bank in the United States. So I have enough exposure to that. My next play, I might buy some more Chinese stocks. I own a bunch already that I bought at like 50% off, and then they dropped all the way down to like negative, down 75, but I bought them down 50 or down 60. So they are still a loser, but I was thinking about buying a different portfolio, which has already dropped 80%, of course, right? That is focused primarily on high dividend Chinese stock. And the idea is maybe buy some of that and sit on it for, 10 years. But the idea that we're closer to a Chinese stock market rebound based on we're closer to a Chinese economic rebound, but it might not be till next year. But at some point, if I'm buying like Credit Suisse at 95% discount from the old high, and if I'm buying Chinese stocks at 80% from the previous high, I don't expect to really return to the previous highs. And if we do, it will take a decade, because the only reason we got stocks to those old highs is because we were pumping free money into the economy around the world, and that ain't going to happen again. So, okay. So that's that. Oh, Cash says, Wayne, why Truist? Okay. It's a regional bank. It's in my region where I actually live, so I'm familiar with it. But also its revenues are up, its profits are up, its profit margins are up. And after I bought it, like literally an hour or so after I bought it, a couple of analysts and a bank, I forget which bank, upgraded Truist. So others agree with me, like, hey man, it's pretty good. Okay, it seems to be a well-run bank, and it had dropped significantly because of contagion fears. And I'm like, well, that's stupid. So I try to play everything logical. So remember, they're not trades. I don't trade my retirement account. I invest. Comerica, yeah, well, Cash, Truist pays about 6.5. I think it's 6.3% dividend. So because I bought the stock so cheap. When they declared their dividend, it was closer to 3, but then the stock dropped by 50%. So now it's 6. So yeah, so I bought it cheap. Yeah. So, yeah. And that was part of it too. I'm like, oh, that's a pretty good. See, here's the way I look at it. If we have 6.5% inflation, then I have inflation protected investment into Truist. I'm like, what inflation? So anyways, that's the stock market. Yeah, it's pretty good. So the Chinese portfolio, I'm thinking of buying, putting some money into this fund. The dividend is 13%. And that, one of their biggest holdings is Sinotech, which is a big Chinese oil company and stuff like that. And I'm like, oh yeah. Okay. But here's the thing, Cash, sounds good, right? The portfolio is down 80%. So when you look at the portfolio, it just shows, 1 year appreciation, negative. 3 year appreciation, negative. 5 year appreciation, negative. So you're like, whoa, this thing is a dog with fleas. But it pays 13% dividends. But the stocks have fallen. So now what you want to do is think, hey man, what about, are we close to the bottom, and where will we be 10 years from now? So the thing is, will it go to 0? I don't know. Will it go to 10? Maybe. But on paper, I'd lose 50%. But then I think in 10 years, it'll be at least back to where it was. So the only thing I do is collect 13% a year. But maybe there is a reopening. Maybe China does rebound. Maybe Xi does a stimulus package, and I buy these stocks at 80% off. Remember, they're paying dividends, so they're making money. These are all profitable companies. And so maybe in 5 years, the account will have doubled and earning 13% a year. You see? So, I got to look on the long run, right? Is the 80% discount enough to take the risk? What's the biggest risk? Will it drop 50%? Yeah, maybe, almost, maybe, probably. But will it go to 0? No. So how much risk am I taking, right? So I don't know. That's for me to figure out. So anywho, here we are. We've double bottomed on the monthly target. And so it's still bearish. What can I tell you? But I think there's going to be a lot less volume. So why don't we add some volume here? There's different ways to do this. You can have volume this way. Okay. And volume has fallen significantly. Or you can add volume in a couple of different ways. Okay. Indicators, volume. Okay. Money flow. Let's do it this way. I'll make it a little thicker. Okay. And this is an index of bulls and bears. That's why it's floating between 0 and 100. Okay. So still bearish. Okay. Okay. Still bearish. That's all. Another thing you could look at, instead of looking at an index, which is all the bulls over the bear, all the bulls plus all the bears comparatively, and then indexed. That's why it comes out as basically, a percentage or whatever. And there's a different way to look at it. You can go to on balance. And it's the same idea, but not indexed. Okay. And I like it actually, because what it says, there were more bulls than bears in this period. And then the bulls started leaving here. Okay, you see? Before the decline. And if all the way down to definitely here was a big change. Okay. And then you can see here was an important change too. What happened here? Okay. Okay, that's not straight, of course, but I'm trying to get this. What we did here is we hit the target and all the bears disappeared. You see how important that is? It's not, see, you can't the reason you get divergence, okay, this continued down, but there was divergence. It's not really bulls and bears. It's how many bulls versus how many bears. So the stock market went up, and then around this point, what happened was really, let's say the same amount of bears, but less and less bulls. Bulls were taking profit. Bulls were taking profit. Bulls were getting profit. And then somewhere in here, bears actually started trading. Probably not until this point. And then when we get closer and closer to target, you can see some of the bears started taking profit. And then here, a lot of bears took profit. And what do we see now? There's significantly less bears. Now, we don't know if there are bulls, but we know on balance, there's more bulls versus bears than there used to be. You see the difference? So you have this divergence of on balance is up, but this market is sideways. And while we're in that mode, it just means there are a lot less bears than there used to be. If it was bullish, we'd be making higher highs and higher lows. We're not doing that, but we also don't have the bears. So I would say this is still bearish to neutral. Okay. So we'll get over to the ECB in a bit. Cash Insomnia is thinking about which ETF I'm talking about. You know what? I've been thinking and thinking and thinking. I mentioned this the other day, and I'm still thinking about it. Might need to talk to some lawyers, but I was thinking of starting a charitable fund. I don't know how it's going to work. That's the problem I'm at. But I was thinking of starting a charitable stock fund. I don't know how to do it. But it'd be interesting building a portfolio like that that's crazy diverse. Okay. Oh yeah, QuantBox. Yeah, our super secret fundamentally based alert service now has a name. It's called QuantBox, QuantBox.co. For all those in the retail subscription and you're like, hey, something's changed. Yes, so the super big announcement I made yesterday is up until yesterday, all the retail subscribers to QuantBox would get weekly reports. They were beautiful, they were easy to read, they were clear, but they were weekly. Once a week on Sunday, you'd get like a 17-page report for the week ahead. So what I announced yesterday is, as of now, the report is live. Real-time live. No more weekly reports. In fact, they're gone. I removed them from the website. You now have direct access to the Google Cloud. Okay, here's the thing. If you don't have a Gmail account associated with your QuantBox account, you can't get into the Google Cloud. So I need to have you change your email address. If it's a non-Gmail account, I need you to change your email address to a Gmail account. Okay. Let me see if I can just bring it up. I don't know if I have an account, but Okay. Oh yeah, it looks like I'm logged in. Okay. So this is the macroeconomics course. I gave it to everybody for free, so you understand macroeconomic principles. This is where I'm going to put the QuantBox training course. Okay. And so if you go to retail and you get a message like this, it's because you're not using the right Gmail account, or it's not a Gmail account at all. Because it's actually trying to log you in to the Google Cloud. Okay? So you're going to need to update your email address. Okay? So this won't log you in. Okay? That won't log you into the Google Cloud. You need Gmail. Yes, Cash, I gave the course to every subscriber for free. It's now unlocked on everybody's account. Retail, annual, everybody. Okay? So Santiago, that's probably the issue. Okay? And if it still does that, email me, because I probably have to manually do it because you didn't enter it. Now, those that purchased the annual, I think it's very, very clear that you need to use Gmail. And I think I might have forgotten to make it clear on the retail side, because remember, the retail side never had direct access. So I might have forgot that in the sign-up process. So I will fix that. Okay? Bumpy says, why Gmail? Can you use PayPal? No, I'm talking about email, not payment. Okay? You have to use Gmail because it's the Google Cloud. Google won't let you access the Google Cloud without a Google account. You need Gmail. It's not me. You can't access the Google Cloud without Gmail. And it's all right. So update your email. It's not hard. You click on your profile, go to settings, change your email. Right there. Okay, so anyways. Okay, cool. So the other thing is, most people have multiple Gmail accounts. If it's blocking you like that, it may be because you're logged into the wrong Gmail account. But like I said, and only retail people would have this issue. Annual people won't have, the professional subscribers won't have this issue. So I'll tweak the process. Okay. But if you changed it to Gmail and there's still a problem, email me, wayne@fxbootcamp.com. I'll try to go through and double check everything. But I might have to manually log into the Google Cloud and manually give you access. It's okay. It's just for now. It's just a little tweak. It's not a big deal. So yes, all retail have direct access now. It's awesome. Okay. You know what? We actually had to rebuild the entire thing from scratch, like we did with the QuantBox Pro. It's not like we just have a different sort of like tweak a thing and you log in. It's a complete replication of the database. So there's actually two databases now. That's the only way I could do it. And you'd say, oh, you just copy and paste, right? So you just copy and paste QuantBox Pro to QuantBox Retail. Nope, can't do that. So we had to rebuild it. I've built it twice. I'm not even joking. I had to rebuild the whole thing so that retail people could have live access. So it's twice as much work. And cool, right? Oh man, my glasses are so dirty. It's unbelievable. All right, we'll get rid of them. So cool, right? All right, so I like on balance volume the best. Okay? And notice that you will get divergence on these things. Oops. Okay, you can see here the divergence mattered, and you can see here the divergence mattered. The market's moving sideways, but we're losing bulls. The market's moving sideways, but we're losing bears. And here's the thing. If you know how to trade properly, you expect it to happen here and you expect it to happen here because of the technical analysis, and you know it. So when you see it happening, you're like, oh, profit taking. Oh, profit taking. Okay. Now, what you might want to wait for, like you might think, okay, we're going to resume back this way. That might be true. But you might say you're going to wait to re-enter the long-term downtrend. So you might wait for this to roll over, okay? Which means you're losing bulls or bears are getting back in. Cool. $1.92, thank you. Less than 200. Okay. Look at that, kicking off our resistance. Isn't it beautiful? Going to the hourly. Look at that. I mean, we did this. We do this in white. I mean, we did this a couple of days ago. There's our line in the sand for bears. You see? Oh, God. Isn't that beautiful? So there's your sell zone. Okay. So when you get there, if you get there, then you do what? And that's the whole point. Then what? What do you do when you get there? So if you're on a 5-minute chart and you're using this, okay, can you see the visualization here, the rollover? You see how all of a sudden you're below? Okay, so that could be your in, that could be your out, and now you could be waiting for a new in when you start dropping below, when it rolls over one more time. I like this chart. Many of you say you don't like the chart. I actually like it. Okay. Notice here, again, we drew this a couple of days ago. Hit our line in the sand, hit our line in the sand, hit our line in the sand, hit our line in the sand. Isn't that amazing? LGBTQ chart? Sure. Sure. Jeffrey says, hey, it's a nice chart. just that most of us don't understand how to use it. Well, first of all, it's super ridiculously easy. But what most people do wrong is they use their indicators to make trade decisions. That's not what your charts are for. I covered it in my presentation yesterday. Oh, and by the way, I apologize. We filled the Zoom room yesterday, and there were hundreds of people trying to get into the Zoom, and they were blocked because Zoom was at max capacity. And I apologize to everybody. I did email you a link to the recording. If you want, maybe we can do another one next month if you'd rather do it live or something, but I apologize. Okay? I apologize. But one of the things we covered yesterday is that your charts are for entering and exiting trades, but not making trading decisions. So the biggest thing for me to say, Jeffrey, is in our analysis previously, and so we got to go back out a little bit further. Okay? I think, is that too far? I don't know I don't remember what time frame we made this decision. But anywho, we had this price as our selling price. Okay, so let's just get in here. Okay, and that's now a daily chart. But I just want you to understand that we had this as the sell zone way before it happened. Okay, so that's not how you use the chart. Let me back out now. We can use a 15-minute chart if you want. Okay, let's back out. Okay. So how do you use it? This chart on a 15-minute says, get ready to sell up here. Okay. What the chart is showing you is this is when you pull the trigger. You might have tried here, and that's fair, but it didn't work out. All is fair in love and war and trading. Okay. But you're just looking for the rollover. That's the only way to do it. So now we're at neutral. And probably, if you're a bear, looking for it to kick off neutral and resume its way down. The idea is to sell into the moving averages if you're a bear and you're below the neutral zone. Okay. Now, a bull might have looked at this differently. So let's look at this from a bullish point of view. Remember, you don't use your charts to tell you whether you're a bull or a bear. So if you were a bull, you'd say, well, this is support, and you'd probably be on a small time frame down there, okay? And you might have gone long on this rollover, this one here. But don't use your charts to make the decision. Okay? Because all you're doing with your chart is identifying support and resistance. So if that's support and you're a bull, you're like, I might buy that dip. Shoot, you might do it on a 1 minute. Okay? A 1 minute chart would have you buying it here much earlier than there. This is a 5 minute long. This is a 1 minute long. Okay? So that's that. Yeah, I don't really care about Philly Fed though, Bumpy. But jobless claims, yeah. Yeah, hey, anytime, Jeffrey. Okay, so now we're caught in the middle here. And, I'm fairly neutral on a lot of things. I thought Kitty Cad might have been a buy yesterday. And it still might be. Okay, still might be. Okay. Bum 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 bum. Bum 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 psh psh. Bum 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 ba-da-do-do. You will see more is what you need dedicated to. Logging into the database. This is not a web page. Boom. What I wanted to do is heat map. Okay, UK stock market up, German stock market up, Aussie dollar up, Aussie Kiwi up, Aussie CAD up. What do you think? Aussie strong? Let's see. What else going on? Yen strong. Check this out. Kiwi yen down. Pound yen down. USD yen down. You know what we talked, even CAD yen down, Euro yen down, not as much, but these are a fair amount bearish. What I talked about in the day trading group before I stuck my foot in my mouth is yen getting strong. Something we predicted, several weeks ago. We were talking about it in February when the yen pairs were straight up like a rocket ship. We're like, hey, it might be tomorrow, might be next week, but definitely before April, yen will get strong. So we reviewed that again yesterday, and this morning, USD yen down 0.7, pound yen down 0.6, Kiwi yen down 0.5. Now, Aussie yen wouldn't be down as much because we already know Aussie's strong. By the way, this is updated real time. You can see this. 8:41 this morning. So this is live. Live, baby. S&P 500 down about 0.7. Okay? Yeah, seasonality. So in fact, one of the things this is a pro account. You see FX Bootcamp Pro. I didn't even show this yesterday, but I don't have it unlocked. No. Okay, let's go to seasonality, and you could pick an asset. So you could go to what does pound yen tend to do? Oops. Come on. Where did it go? Okay. There's the seasonality for Japanese yen versus pound. Okay. March tends to be up. April, May, June, July, all the way to August, yen tends to be stronger than pound. Oh, you don't know that? Okay. What do you think? Maybe somewhere around here we should be buying pound yen. I don't know. Can't predict the future. But we definitely know what the past has produced. So lovely. Lovely. That's pretty, huh? So anyways, that's why we knew it was coming. All right, there's the euro. Yeah, there's the euro. Ba 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 da ba. Ba 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 da ba ba. Ba 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 da ba. Yeah, I'm not gonna stay for the ECB press conference because remember there's an hour difference. The United States changed time frames and Europe has not yet. I'm not going to stick around to that late. Just so you know. So you can look at here. Bum 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 bum. Obey your master. Just stuck in the range here. Stuck in the range. So I'm wondering if I'll be buying dollar today is basically what I'm at. And that's where I was 24 hours ago. And really dollar hasn't done much of anything in the last, I don't know if it was 24 hours, 12 hours ago. So waiting was an okay thing. But I am still interested in buying dollars. Take a look at some exotics. Okay. Staying away from this one. I was waiting for a rollover. Didn't get it. That's fine. Take a look at some of these commodities. Okay. If you registered Stevie or Stewie, you got the email. Okay, it's automatic, so you've been emailed. Yeah, good. Bumpy says against what? Well, maybe nothing today. But the S&P 500 looks like it's a sell. Okay, pretty easy setup there. So that brings dollar strength. Okay. Okay, my WTI. Okay, beautiful target. Look at that, just nuts. So depending on the time frame you're trading, Okay, still a lot of bearishness. Well, look, you guys are chatting about systemic risk due to Silicon Valley Bank and the Fed. Look, here's my opinion on that. I like bank regulation. That's fine. But more bank regulation? Okay. No. Look, it's not the job of the Fed to run the banks. I don't want the government to run the banking system. If there's a bank that doesn't hedge interest rate risk, they should go out of business because they're a bad set of bankers. It's not the job of the Fed to manage the managers. If it was the job of the Fed to manage the managers, then you'd fire all the managers, close all the banks, and everyone will bank with the Fed. And you will get government quality work. And it'd be horrible. So bad bankers need to fail. So here's the thing. The Fed can look at the books of Silicon Valley Bank and say, oh, they have enough liquid capital. See, they own treasuries. Liquid, conservative, safe. That's not what they put. They didn't go out of business because of bad loans or something. But there was a run on the bank because clearly there's some bad management and it scared the bejesus out of people that had money there. And the bank was forced to sell quality assets but at a loss. Why? Because they were a bad bank. That's why people left. And when people left, the bank was forced to sell assets as a loss. So now they're losing money, which scares other people to withdraw their money, which means they lose more money. All they had to have done is been good bankers. Not even good bankers. Basic bankers. If they just followed basic banking common sense, there wouldn't have been a problem. The problem is they were a bad bank and now they're out of business. Good. Good. Goodbye. Now, they used to be a client of mine. They used to pay me money. So I'm kind of sad to see them go. Okay? Way back in the 90s, they were a client of mine. Okay? One of their directors was on my board. Okay? Okay? So anyways. Okay. But I think something 10 times worse, maybe 1,000 times worse, we're talking magnitudes times worse, is to have the government run the show. Forget it. I'll take my chances with Bank of America. Okay. Well, Stewie, the thing is, it's not like the email system said, email everybody, but not Stewie. So I don't know what to say, and I don't know the link. But I don't know, register again and see what happens, because, okay. Yeah, just register again. It'll probably send you the confirmation, but it's already passed, so I don't know what it'll do there. And then it'll send you the thing that says in a couple of days it's going to send you the case studies, but then that should already trigger the email that gives you the recording, and you'll probably get how to trade like a U.S. Marine today. Is that right? So Maida says she has a problem too. Huh. Well, it doesn't make any sense. Will somebody try registering again and see what it does? I don't know if I have a link for that. QuantBox.co registration page. I have a link for that because it's in my history. And I don't know what it'll do. It might skip all the other emails and just get you today's emails. And again, I apologize. We had hundreds of people trying to get in, but the room was already at capacity. So for those that couldn't get in, I apologize. Denise received the email with the link for the recording. Thank you. Oh, good. Yeah, Bumpy, you couldn't get in. We had way too many people. Yeah. But anyways, if you guys missed it and want to see the recording, just register again and you'll get it immediately. Okay. Yeah, I think what happened is I'm used to doing, I haven't used Zoom in a while, and I do Zoom. I did Zoom. I set up Zoom the way that I set up, FX Bootcamp, like day trading and stuff and swing trading. And I think I should have set it up as a webinar, because in the swing trading group, I have people take the microphone and charts all the time. People present their charts and we talk and I ask questions all the time. It's highly interactive. I should have set it up as a webinar, and I believe in that situation, it's not a meeting, it's a webinar, and you're not allowed to do things like share and microphone, and maybe they have a higher capacity. So, yeah, so. Okay. Yeah. So, but if, yeah, what can I say? And I do have a corporate or professional account. I don't know the difference. I spend, I think it's $230 a month on Zoom. I think it's about like that. Okay. So anyways, my oh my WTI continuing its bearishness. Okay. Maybe we're on our way to 63. Whoa, dude. Hard to imagine us. We were at almost at 65 yesterday. Just amazing. Okay. But notice we're just kicking off the 21 standard operating procedure for a boot camper. Okay. All y'all know that. I was thinking about selling some gold, but probably not today. Okay. Want to sell it? Probably not today. I think we went through everything already. Yens are strong. We already know that. I went through the stock markets, went through the dollar pairs, done the commodities. Everything is doing what it should be doing, right? So selling some oil, selling the stock market, and that should lead to buying some dollar. I might sell some gold to buy dollars. I might sell some CAD to buy dollars. Probably stay away from euro today. Might sell some Kiwi dollar today. Want to stay out of that neutral zone. So that's that. So I invite everybody to also join FX Bootcamp because today is a swing trading meeting. And it's a great day. We have a really good day. It's a lot of fun. And not just fun, it's actually helpful. I mean, it's good. Like, the meetings are really good. And so it's $99 a month. And you get sessions on Tuesdays. And you get sessions on Thursdays that are live. So if you add that up, you know, it's not a lot of money. But I do believe it's helpful. And you'll find that both meetings that the swing traders attend on Tuesdays and Thursdays are highly interactive. It's not listening to me babble on about the market. They're very, very interactive. You will learn and you will improve. Okay? Don't know if you've covered this, but is the swing trading included with the day trading? Yes, of course. Yes, of course, Cash. I would never double dip you. A day trader gets everything. Yeah, there's no tricks. You'll see FX Bootcamp's pretty straightforward. It's no, things are like the $88 a month, or sorry, the $88 a year for the course makes it sound cheap and pathetic. But there's no trick. You're going to log in and it's going to be absolutely, no, I know cash, but I'm just saying it's hard to believe. You're like, dude, this is $1,000 course all day, every day. Yeah, I know. It's $88. But you're like, no, it's worth thousands. Oh, I know. It's $88. And it doesn't make sense. It only makes sense if you turn the brain off that has been burned by other gurus. And you say, Wayne is trying to buy his way into heaven. Wayne is trying to save his soul by making FX Bootcamp approachable and available to everybody. That the goal is to have lots of people that are passionate about what we do. That's, once you get your head around that, you're like, oh. Then you say, well, why don't you give it to me for free? F you. You don't got $88, you got bigger problems than I can solve. But if you can find a way to make the massive investment, you're going to get a huge return. Okay? But you can always steal it from your mom's purse when she's not looking. Okay? Yeah. Give it to you for free. Yeah. Why don't you ask Joe Biden for the money? He'll give it to you for free. So, okay. Well, I have a giant work crew that's supposed to be arriving right about now. Had to clear the driveway. There's huge concrete trucks and stuff coming again. So I got to go mess with that today. Okay. Oh, Peccary says, I'm sorry if I misunderstood what you said in the presentation. Oh, but I thought the retail level account gets access to the smaller version of the live website. Okay. Yeah, but there's no weekly PDF reports. So if you log in and see a weekly PDF report, you need to refresh your page, or you got your browser's frozen in some old version of the website. So let me do it this way. So here's QuantBox.co, and okay, here's the main page. There are no PDFs anymore. There's the macroeconomic course. Okay. So that's a free bonus. Everybody has this now for free. It used to be $80. Now it's free. Okay, cool. Now in here, I'm going to put a training course, which we are going to do live together, about how to use all the different components of QuantBox. And then when you click here, if you're logged into the proper Gmail account, it'll let you in. If you're not logged into the proper Gmail account, it will lock you out. You have to use a Gmail account to access the Google Cloud. Okay, so you got to go here, and then add Gmail. And then you probably need to email me. So I'm going to email you about emailing me, but you were supposed to register with the Gmail account. Now, I think what I did is I missed in the process of launching the new feature, because again, I have to reemphasize, it's not like we just copy and paste the old QuantBox database and we have a new database, or I turn some of the other database off for one subscriber level and turn other features on for new subscribers. Google doesn't work that way. It's a database. We had to rebuild everything from scratch. There was no copy and paste code. We had to rebuild everything so that it was live and not weekly reports, but live. So it's very expensive to have done that. It was not an easy, free thing for me to do. Okay. But anyways, what I'm saying is when people were signing up annually, it's very clear in this sign up process, you must have a Gmail. And I forgot to update that other page, or the trial page. See, monthly people actually, they start with $7.90. Oh, but it says right here. Well, then you didn't understand. You didn't follow the instructions. Shame, shame, shame. You must use a Gmail account on this purchase form. All right, so see, so it is set up properly. So if you do this, then it automatically adds the Gmail account that you used to the Google Cloud to unlock it. Oh, okay. I got an email saying that. So I will double check what's going on, but I will look at people that I will check. Let me check. I'll check today. I'll figure out I'll find everyone that's signed up for the retail. And then I will so I'll create a list of people, okay, that signed up yesterday. Then I'll log into the Google Cloud retail and check that to see if you're added to the access list. Okay. And then we'll see what's going on. If Google stopped communicating with QuantBox, then I will talk to the developers, but I can manually add you. If you weren't there, it can manually add you. But if you're not even using a Gmail account, well, that's it. But the thing is, guys, we all have multiple Gmail accounts, right? So you might be logged into the wrong profile. See, like on here, I have 1, 2, 3, 4 different Gmail accounts. So if I'm logged into my FX Bootcamp Gmail account, I can't get into QuantBox. So you have to just manage everything appropriately. But we'll see. I'll double check. I'll double check. We only did this yesterday. Okay. Okay. And Pekri, send me an email of what's happening then. Wayne at FX Bootcamp. Okay. So I need to see what you're seeing. Like, if you might be blocked for, I don't even know what you mean blocked. Like, again, it should be working perfectly fine, right? So Wayne at FX Bootcamp. Okay. I'll check it, but I'll try to figure it out. It should be working then. It should be. So we'll see. My fear is you're not added to the list. So then I have to talk to the developer of the system of adding you to the list is broken down. And that's going to be more of a bitch to deal with, but hopefully it's not that. I checked yesterday for a few people they subscribed and they were added to the list. So, but once again, one guy used a non-Gmail account. So I had to do that manually, right? So email me if you can't get the data. So again, you're here and it's blocking you. Can't access report. I need to see 99% chance you're just not logged into the right account. See, look. Now it's pulling in the database. It's not a web page, guys. See, it's actually building all the tables. It's all live data. Oh, God. Okay. Okay. Look at that. Oh, God. Yeah, well, email me. I need to see it, Peccary. Yeah, we already knew the ECB was going to go 50, so that, like, there's no... Okay. That's your COT report. Okay, so you don't get those, but you do get these. Good. Yeah, it's working beautifully. It's working beautifully. Lovely. With your smile so worn and your teeth so green, baby, you smell like Vaseline. All right. Cool. Everything's down, 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 down. By the way, just so you know, if you're in this quadrant, oops, I'm going to move this color. If you're in this zone here, QuantBox said earlier, or let's say QuantBox expected all these assets to be down. And they are down. Okay? Do you guys remember in school when they said plus is positive, minus is positive, minus positive is negative, and positive negative is negative. Do you guys remember that? So what this is saying is everything over here, QuantBox says was going to be up and is up. Everything over here, QuantBox says was down and was down. And these are the assets that are underperforming. So let me clear out. These are the assets that are underperforming. These are the assets that are underperforming. And these are the ones that are good, performing as expected. And these ones are performing as expected. And the farther down they are, like this, the better they are. And the higher up these ones are, the better they are. You see? So the yield on the 10-year T-note has dropped as expected in a huge way. So we call this an outlier. So if you had traded 10-year T-note along with the QB, you crushed it. You destroyed it. Okay? Good. Yeah, good. But all these yen and Swissy pairs, they're all down as expected. Yep. S&P500 and Dow and the Japanese stock market all down as expected. And these were unexpected. Well, today, so Denise gave us a little hint. Okay, you want to look at these for tomorrow's sell. I don't know. Denise does it over 2 steps. You'll see it in her case study. But you could just look at this and say, these are all up, but you would think they would be bearish. That's what you would think. So maybe tomorrow, maybe today you look at all of these things for sells. Oh God, like who cares if these worked out? You see that? Who cares if these worked out? You already knew they would work out. That's not going to help you today. That's already happened. So you're like, oh, these are all out of position for shorts, and anything over here is out of position for longs. So one of the things I showed you today is I'm thinking about maybe buying some USD CAD. Because it's supposed to, quote unquote, supposed to be, if I can get my drawing tool, it's supposed to be up here, but it ain't. And all of these are supposed to be down here, but they ain't. Not today. Okay, you see? So that's the same way to do what Denise was doing, but sort of faster. And that's why I have it on the homepage. I don't care about what's working today. I care about what's supposed to be working tomorrow. Anywho, look at that. And that's all inside QuantBox now. And I don't have a pro account associated with that email, so I can only get into the retail account. Oh, logged into the wrong one. Go to the right one. And it unlocks it. It's beautiful. It's beautiful. See, now it has to recreate everything. It's not a little web page. It's gorgeous. Don't forget down here, you see down here? See where my mouse is? Oops. Okay, that's for going full screen. This is for opening your menu. It's all dynamic. Cool, huh? Commodities, gold. Okay. Gold says up. And I've been a bear, so I need to maybe change my tune, huh? Gold is expected to approach as high as 2,000 by the end of the week, next 7 trading days. Cool. Anywho, that's enough of that. I gotta go. Oh, dollar getting strong again. Lovely. Look at my USD kitty cat. It wants to be in the upper right quadrant. Remember, it's only calculus, everybody. It's underperforming today, which might make it a good buy. Who cares if it overperforms tomorrow if you're not on it? The thing is, you'd have to be bullish on this when it's down and then buy it when it's underperforming. Good. All right, there you go. Peccary has a privacy plugin in the browser, which don't allow cookies. All right, well, it's the only way, right? You have to access the Google Cloud. Now, Richard's already in that from yesterday. You want to see something interesting? I'll have to show you. Oh, I don't think it's going to be in here. No. It's all in the pro stuff. Yeah, I can't get you in there. Yeah, the back testing. Oh, it's a new feature I haven't shown anybody yet. But it's in the pro version. Oh, I haven't even showed you that. Anyways, I gotta go. Okay. There's nothing on QuantBox that's $199 a month. Yeah. So I'm not sure what you mean, Stingray. All right, cool. So anywho, peace on earth. May the pips be with you. May our profits be above average. Ciao. Hey, that just happened. Booyah.